In the first place, the quantitative differences of money ownership imply the most considerable qualitative differences for the owner. This is such a trivial fact of experience that to emphasize it would seem meaningless, were it not for the constant temptation to reverse the interpretation of the purely quantitative character of money and to conceive its importance and its effectiveness mechanically, that is to conceive of the more important as the multiplication of the less important. I wish first to mention a quite superficial case as proof of how drastically quantitative differences in the concentrations of money intervene in its qualitative consequences. The issue of small denomination bank notes has a character totally different from the issue of large ones. People with a small income, who are usually the owners of small notes, cannot as easily present them for redemption as the owners of large notes can. On the other hand, if a panic breaks out, the former press for redemption more violently and thoughtlessly or give the notes away at any price. The following more general considerations support my basic argument. Subjective differences in amounts of risk. All money outlays for the purposes of acquisition fall into two categories, with risk and without risk. Viewed abstractly, both forms exist in every single outlay if one excludes gambling. Even the wildest speculation must reckon with a very considerable loss of value, though it need not fear a nullification of the object of speculation, whereas on the other hand even the safest act of acquisition always contains an element of risk. In many cases the latter risk can be practically disregarded as an infinitely small factor, so that one can say of every transaction either that there is no risk at all or that a definite portion of the invested capital, in other words the assets of the subject, is at stake. It seems reasonable to determine the size of this possible risk by two objective factors, the probability fraction of the loss and the size of the possible profit. It is obviously unreasonable to invest 100 marks in a business where the chances of loss are 50% and the highest possible gain is 25 marks. Under any circumstances it would appear rational to wager 20 marks on the same terms. But this subjective calculation is not sufficient for calculating the reasonableness or unreasonableness of risking a definite amount. A personal factor must also be considered. In every economic situation, a certain fraction of one's possessions should not be risked at all, regardless of how large and how probable the chances of profit might be. The desperate risk of the final gamble, which is usually justified by the statement that one has nothing more to lose, indicates by this very argument that any vestige of rationality has been deliberately abandoned here. If, however, one presupposes rationality, then the question of the objective probability of the success of a speculation should be raised only for that part of the assets that lies above a certain fraction. The amount below this limit should, rationally, not be risked, even where a large sum might be gained with a very low probability of loss. The objective factors which otherwise determine the reasonableness of risk are totally irrelevant here. The money form of values easily tempts one to misjudge this economic dictate because it subdivides values into very small portions and so tempts the person with slender means to take a risk that, in principle, he ought to avoid. This has been typified, for example, in the gold shares to the value of £1, which were issued by mining companies in the Transvaal and Western Australia. In view of their relatively low value and the very high chance of gain, this share has been bought by people who normally have nothing to do with stock exchange speculations. A similar state of affairs is created in the Italian lottery. However, in many countries, modern legislation relating to shares attempts to counteract this danger to the welfare of the people by establishing a fairly high minimum for the nominal value of any share offered. If a speculative value of an enterprise or a loan is offered in very small shares, its objective insignificance in relation to the total amount easily deceives the buyer that its subjective value, that is, in relation to the buyer's assets, is considerable. And the further fact that it is possible to make a speculative profit with such a small sum makes people forget that their circumstances do not permit them to risk this sum. The tragedy in all this is that people whose income provides only the minimum level of existence, and who therefore should not risk anything at all, are most strongly subjected to such temptations. Not only is the profit that is based on probability denied to those whose situation places them in most need of it and who are prevented from obtaining it by the logic of their situation, but their security against losses based on probability is also denied them, and it is precisely these people who can least bear such losses. Often, many less well-off families do not make use of the insurance which, for a relatively small premium, provides care for the servants in case of sickness. To take care of sick servants may be difficult, but they would rather run That risk, because at a very low income even low fixed costs seem less tolerable than the mere chance of much higher costs, no matter how irrational such calculations may be. Clearly, within an income or fortune the limits beyond which the risk is economically justified are all the lower, that is, a larger part is free for speculative purposes the better the person is situated, not only in terms of an absolutely larger amount, which is obvious, but also in terms of a relatively larger amount in proportion to the total income. Not only does such a difference exist between very high and very low financial circumstances, but also more minor differences may already indicate the justification of different amounts of risk. This is a further contribution to the unearned increment of wealth which was discussed earlier, since obviously a fortune has a greater chance of increasing, the larger the portion of it that may be invested in speculation without endangering the economic existence of its owner. This situation also illustrates how money takes on a completely different qualitative character through mere differences in quantity and how it subjects monetary matters to qualitatively different forms. The completely external and, indeed, even the inner importance of a sum of money is different, depending on whether it lies below or above any dividing line. Whether it does lie above or below this line depends solely upon the total assets of the owner. Changes in the quantity of money produce totally new qualities. The qualitatively different consequences of quantitatively altered causes. Finally, all this fits into a very general form of the behavior of things, the most striking instance of which can be found in the sphere of psychology. A quantitative increase in phenomena that are operating as causes does not always call forth a proportionate increase in their consequences. Rather, the augmentation of a cause that resulted in a definite augmentation of the consequence cannot be sufficient for the same purpose on a higher stage of the scale. A much greater influence will be required in order to attain even the same effect. I remind you of the frequent phenomenon whereby the working capital that produces a definite return in a newly developed area of acquisition has later to be expanded considerably in order to continue to yield the same return. We might also point to the effect of medication which, in the beginning, can be increased by a small increment of the doses, whereas later exactly the same additional applications produce much reduced effects. Or we may point to the joy brought about under strained financial circumstances by a profit which, however, will no longer produce a joyous reaction if it is continuously repeated.